We need to dive right into the S&P 500 and the Nasdaq 100 and exactly what is moving the market. Now, going into the end of the week, I expected a little bit of a dip. I expected a little bit of downside coming into today. We're going to talk about the news and the other factors that will be affecting the market specifically this week. You have about 20 Fed members or 20 speeches overall from those Fed members going on this week alone. This could definitely set up for more potential downside based on how they view the market. Before we get into all that, I have to ask you to consider doing two things: liking and subscribing. I post these videos every single day, Monday through Friday, and occasionally on the weekend, breaking down the market and what we are looking for to trade. I'll show you what I'm trading, and you always know this is unbiased because I tell you if I'm in a position or not in a position. And today, I'm in a position, people, and I'm going to share exactly what I'm looking at. Now, I also like to take this time to go over what I have and what I did on the day. So I'm going to share my position right now, and I'm going to make you wait. So I ended up buying SPY contracts for the downside, and then as well as J Ream, he actually traded NVIDIA. He got those positions at around 3.5, and by the end of the day, those things went crazy. They went to over $5 by noon. I can only imagine what they're at right now. So that's the two trades. Nothing super complicated, not a crazy amount of trades. We take the potential. We want to trade high value trades, not over trade. That's not how you win in this market overall. That's what I'm looking at. That's how I traded. That's what we're doing. So looking at what's happening right now in the market, I'm going to talk about what we're looking at and kind of how we did on the positions. Now, obviously SPY did well. Obviously NVIDIA did well. You're not going to have days where you're winning all the time, right? And I like to be very transparent about that. Luckily for us, today was a good day based on what we're looking at. I want to go into about the 15-minute, and then I'm going to start breaking down a little bit more. First, I'm going to start with NQ, and only indicators I'm using here, people always ask me, I'm using the VWAP and the 90 EMA, and I don't really need those to cover this. That's more of just trading intraday and things to look for. And I use the opens indicator to show me kind of and map out what day it is so we can kind of stay organized here on the channel as well. Now, going back, this is basically our low range from June, right? And you keep getting tested in this range and you're bouncing and you're kind of reacting to this. On NQ, you still are making from this range, or you were until the end of the day, higher lows. You were still trying to operate in this, trying to push up. You got the push back up to today, 11.52, which is ultimately what we wanted to get back into those positions. And what is this level? Well, ladies and gentlemen, it's your previous low range, right? You bounced, and then you eventually broke, and you got the retest, and now you're pushing back down. This is what we wanted to see, and we got it. Going into ES, this is going to give you a little bit more. So that was the Nasdaq. This is basically the S&P 500. This is what I love to see. Looks a lot worse than Nasdaq. One, you are in a clear bear flag over the past 24 hours going back to Friday. You need to recognize that, and you need to have that marked out for yourself. So what does it say? This is a continuation pattern for the downside. But the key thing to know here is you're flagging right above that previous low that you had established back in June. You need to understand that. Now, in my opinion, I'm prepared for downside. That's why I started shorting around 11 a.m. on this bounce up. That's when I started getting into my position. Now, since then, you could not get back towards the weekly, the daily open on the day, and you continue to push down, and you're making lower lows as we speak as well. That's the big thing there. So going to SPY, and we look at this as like a actual trading, what I'm looking at is with SPY. And when we look here, I want to show you on the 5-minute how you traded throughout the day. This is why I use these as well. If you haven't seen the video, I have a video going over the education here too, how you use the weekly, monthly, and daily. It's really like a cheat sheet for beginners into price action as well, so you don't have to do too much complicated work. But basically, beginning of the day, you bounced up really nice. You tried to test like the area of where that gap got to. You couldn't. You bounced back down. And I want to mention what I said in Discord as well here, right? Because again, I like to like show you guys what I'm looking at in the beginning of the day before I start trading, right? So before at around 8:41, you can actually see here, I posted this chart overall where I'm looking, go to 8, possibly 70.5. If you break above that and start gapping, maybe go to 874. So I wasn't looking at positions to start the day, right? Remember, I was liquid going into the weekend, right? And so once we got that, that's what we were looking for. No need to rush new plays. And then obviously I started getting into plays. This is where Jay ended up getting into his position, right? So I want people to know, like, you don't have to force plays, right? And ultimately, I kind of missed some of this, downside here. I could have been up almost 50% on my position if I entered up here. However, we were still able to make a good amount of money having a plan. Again, you need to come into this market with a plan and then watching what happened. Now, look what happens. You have that daily open right here where the weekly open is as well. And guess what? You can never hold above that level all day long. You start getting a wedge down, down, down. So when you're looking at the market, you need to acknowledge what's happening and kind of the overall sentiment going on here. We're going to go into Bookmap and a Cheddar Flow as well, but I want everyone to understand what's happening here is you're making lower lows. Okay, you are making lower lows. You're not making higher highs. And then you're finding new resistances along the way. Now, as we get into Bookmap here, going over the volume and going over who's buying and what big money is doing, because you need to understand that as well. If you're new here on the channel, our main way of trading is based on two things. Price action, which ultimately comes down to number two, which is volume. We're looking at how price is moving, supply and demand levels, and then we're also combining this with volume. Volume is the number one indicator and the most important. It's more important than any indicator that you can look at. And that's why I like Bookmap. Bookmap, the link's down below if you're interested. You can also get on TOS, but this is no way a sponsorship, or I am sponsored by them, but I want to say this is no longer like a sales speech or anything like that. You can really just use my page if you want every single day to get the information you need to know. Now, where do we see most of our volume come in throughout the day? Market open, market close. And then you'll get some around lunchtime or out of lunch. Okay, this is what's interesting here. To start the day, when we were kind of getting that push up, we were seeing short selling. We were seeing a lot of downside pressure. We saw 1,000 lots, another 800, another 800, 500, just on and on and on, right? And then you saw that downside almost into 11 o'clock. And then you started bouncing from these lows down here. And then you started seeing some buying. Now, this was interesting because I was looking at this and I was like, it's pretty shocking that you're seeing any buying down here, in my personal opinion. And you were also in that bear flag we talked about. But then we saw really what I needed to see to secure my position. We saw the major selling stepping in. Major seller, 2,800 lots, another 1,700 lots. And then you saw a little bit of buying or attempting buying here that was dominated by selling again in the after hours. Okay. So what am I looking at? What am I saying here? When a bulk of your volume was being bought into the market, what was happening? It was heavily into shorting. When arguably the weakest amount of volume on the weakest move of the day to the upside right here is you were seeing some longing. So what does that tell me? Tell me right now that the buyers have no match and they're not even in comparison to what you're seeing from short sellers and the quote unquote bears here. Step two, what am I looking at here? This green line, this is our CVD. It's, again, I like to break this down. So if you're new, so just bear with me. We got to, for the new people here, we like to keep the community involved to the lingo that we're talking about. Our CVD, cumulative volume delta, Investopedia has a great definition if you don't know what it is. But when we're looking here, what it does is it shows total number of buyers, right? How many different buyers are coming in, right? Versus sellers. So when there's more sellers, right? Not the overall size of the position, but the number of people, this will be red. When it's green, what does that mean? Obviously, there's more buyers than there is sellers. But it's very important to know, what do we have to establish here? You do not need great volume to go up, and you do not necessarily need great volume to go down. You just need more sellers and buyers, more buyers and sellers, vice versa, right? As you're seeing this, you're seeing a green CVD all day long, and ultimately on the most bearish move you had at the end of the day, still kind of trying to move up. This is a bearish divergence in my opinion, and this is showing downside potential as well. We've looked at this a lot here on the channel, and I've shown a lot of instances. If you're not even new to the channel, if you've been here for any time at all, then you've seen me show how this works here. So I want to make that very, very clear. So this is what I'm looking at, and I still see more downside coming. Next, I want to go into Cheddar Flow. As we go into Cheddar Flow, this is actually we're going to go over the calendar here in a sec as well. But looking at Cheddar Flow, first up, actually, I want to save that for y'all. We're going to look at SPY first. Okay, what we like to look here is I order these into premiums, right? A lot of people they like to look at, they kind of like to like move it and look at the things that can kind of confirm their bias. For me, I like to look at the biggest orders, one. That's why I like to, if I'm gonna use options and look at any of that data, I want to see the biggest orders. I want to see where big money is going. I don't care if people are buying, selling. I want to see where the biggest is so I can protect myself, right? I'm okay being wrong on a trade if I can catch it early. If I can catch it early, guess what that means? I save myself money. It's still a win in my book if I can catch a mistake. But the going theme here, what is it? Biggest orders, and where are those coming in on SPY? just not December, sorry, October 21st. Again and again, people, I keep telling y'all that y'all need to be watching this. Another big buyer around 17 million worth coming in for 346 puts October 21st. We're sitting at crazy numbers for October 21st puts. Next up, looking at VIX. What's happening here? Still, we need to look at this chart here in a second. But big money is betting on upside with VIX. And we've been talking about this for almost a month and a half on VIX with what's happening here. Number 3, this is the one that we need to look at. QQQ. You had a $95 million order coming in at the money puts, 285. Boom. Absolutely gorgeous. Absolutely. I cannot say how beautiful of a position this is. I wanted to make sure I was not lying here. Look at how beautiful that is, people. 95 million. One of the biggest orders we see on Qs in months. Maybe one of the biggest for December here. Qs are heavily established for December, in my opinion. There's still a lot in October. SPY's heavily October. Qs are looking more and more like December here. We're seeing a lot of red coming in here, specifically big money bets. We like to follow what big money is doing because hopefully we can get on the same trend as them, and we want to follow what they're doing, right? Because if we want to follow people with big money, traditionally we're going to make more money if we can side with the way the trend is moving. Now, I also want to address people, if you're not using thefedreserve.com, you can actually see their total schedule here, but also they might miss some. You can also come to investing.com and look at the total calendar. You have Powell speaking tomorrow morning, supposedly at 7:30 Eastern. This is not on the Fed website, so it's interesting. I don't really know what's going to be spoken about here, but nothing he has said has been good for basically 2 months, so I couldn't imagine a trend shift now. That's that. Now, I want to go into some of the more fundamental technicals we need to look at here. 1, J&K, the best overall indicator for risk on and risk off in the market. This was your low from June, and guess where you're at now? You are just nosediving. You're like a plane going straight down. It's like the movie Flight with Denzel Washington, to where he somehow inverts it. However, Jerome Powell's not going to invert this plane for us as of right now. It looks like, unfortunately, we're going to crash. Going into DXY, the dollar, again, if you've been here, go watch my previous videos. We were talking about how it was mounting support here for days, right? Guess what happened? The dollar went straight bananas, people. Crazy. And you look like you have more upside potential here. Now, it's probably going to slow down soon, but it's still going crazy. And when the dollar goes up, generally, stocks go down. Of course, the most important or favorite one to look at here is the US 10 versus US 30-year yield, which in my opinion is the best chart for inversion to signify when a recession and high inflation is here. You have already passed 2018 highs, and you've destroyed the 2018 highs. Going back to the housing bubble, guess what? You have smashed your highs that you had back here, okay? Let's get rid of this really quick. Boom, destroyed them. Last up, .com bubble. You're right there, people. You are right there near highs. You are right there ready to smash them as well. You've officially gotten to one of the most dangerous territories of our economic history over the past 20 years. And it's not looking good here. So this continues to be one of the best indicators to show when downside is coming. And luckily it worked again today for us in the Discord. And then I covered this on Friday as well about how it was looking so crazy and how you're just smashing through these key levels here as well. So looking at the market, that's what I see here. Going into this, I've already given my longer dated targets. I'll do more updates on those as we break lows, and fingers crossed if we do break those lows. But overall trades that I'm looking at right now, if I'm looking at anything with the indexes, I'm going to be super clear with you right now. This is not financial advice, do your own DD, but it's heavily affected on the overall volume and open interest of what I'm looking at here. So for SPY, I love 360s, 350s, October 21st. Those are my favorites, honestly, if you're looking at shorter dated. Going into December, similar contracts, they're just going to be more expensive. QQQ, you're looking here. I told people in Discord, if I'm looking at Qs, I'm going for 270s just because that's where the lows are locally. I love those as well for October 21st. You can go for December if you want. They're just going to be a lot more expensive. But the Octobers have been moving fantastic so far, and I just kind of keep rinsing and repeating the same trade there. IWM, probably the most interesting play here as well when it comes to indexes. I want to highlight where you're at. On the daily chart, look where you broke. You broke below your pre-COVID highs. So you're already in this pain. And the question is how low will you go here? Target here, 150 to 145, in my opinion. I think you can come deeper. You're going to have a few areas here of support. Keep that on your mind, but really 145 to 150 is where I'd be looking. I know broad range. I'm sorry, but I do have a really interesting chart here, and you've really been hurting. You're going to see small caps get destroyed during the next major dip that we have when we start breaking through some of these lows. Again, fingers crossed if we do. So you need to be paying attention to those. Stock wise, I like to talk about some stocks if I can, if there's stocks I'm loving here. Tesla, probably my favorite play right now. One of my favorite equity plays. More risky play, but look what's happening. You broke below 280 on the day. You came back up. Oh, sorry, this was Friday. You broke below 280 on Friday. On the day, you broke back above. And then you got the quick retest of 280, and you're pushing back down, targeting around 272, all the way down to the weekly, 271.8. Honestly, I think you're going to come back down and test 266. That's my overall range. Keep it on your radar and be looking out for it. A lot of money to be made there. Next up is Apple. If you're looking for a low risk play, I think Apple is that guy, right? It's just that play. So going over Apple, what am I looking at here? Let's look at a key level of one thing. I want to just highlight how big of a level this really is. Okay, let's just overall draw a range. Bounce, try to bounce, 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 break, bounce, come back down, try to get rejected, come back through, bounce, rejected, rejected. Okay, we're at a major level, 152, right? I think Apple has real cause to come down towards 147 with the breakdown. Apple has not really retraced nearly enough compared to some of the other stocks. And it's going to be one of the less risky options to take on the market, right? And again, what's the general motto here on the channel? It's reduce risk at all cost and create the most reward possible. What does that mean? We want to have ultimately tighter stops and get into plays pretty aggressively when they're bouncing, right? When you get in at major key levels where there's a high chance to get rejected, right? That's where we want to get into our plays. We want to get into it so if it starts to move opposite to the way we think it's going to move, it's time to get out really quick. So our risk to reward is very tight here. And if you're looking here, I think there's a lot of downside here, at least down to 148. Then I'm targeting, of course, 146, 147 range right there. Next up, I want to talk about Netflix. And this is a trade that luckily some traders got in on Discord. I mentioned it live. I actually didn't take this trade. Again, the only trade I took today for myself personally was SPY. I didn't actually miss the NVIDIA trade. You get that bounce up to 232. You rejected. And then you broke below the low that you established here, 227. I'm looking for Netflix, honestly, to come back down to these lows of 215, 216. I think it's highly possible as well. Last up, I'm going to mention Meta. And this actually is not the last one. So if we look at Meta, our big target over the past 3 or 4 weeks has been 137. And congratulations, you hit it today. Big congrats. Meta, you're probably just going to keep sinking. I don't have a target now for it. This was it, and I kind of can't believe you hit it today. Meta, congratulations if you were short there. Microsoft, last play here. I love it. It looks like Meta part 2, to be honest. You broke below your previous lows. You're pushing back down. You've retested 242. You're pushing down. I think 232 is coming really quick and really soon. That's what I'd be looking for. Microsoft. That's going to wrap it up. If you have questions, comment down below. I'll try to answer all your questions as long as they're at least kind of relevant. Have a good one, traders.